interesting data has come in by the way of trade deficit that has now hit a 3-month low, mainly on the back of the fact that commodity prices have eased over the past few months, specifically in the month of December, where exports have jumped 1% from $38.45 billion, or actually $38.05 billion to $38.45 billion. Exports are expanding, albeit very marginally.
Yeah, so I think, Shweta, what is definitely a dampener right now is that despite all the push that the government has tried to do in many initiatives like Make in India, we haven't really seen the export story surge
Really
as much as we would have liked to see. So this narrowing of trade deficit and this data that comes month on month suggests that while exports, we've seen many months of exports rising, albeit marginally in the month of December, just 1% or so, we've also seen imports contract. And this contraction of imports in the month of December specifically has come on account of softening of oil prices. And we saw that the shock that the oil prices took in the month of October, just as the Israel-Hamas war had broken out, that over time between the months of November and December had eased out to the comfort level of the Indian government. So that stability has come in oil prices. Will that stability stay for the month of Jan, Feb, March? We don't know. But just to complete past data, while we have reduced our import bill on crude by way of softening of prices, Indians have actually upped their gold purchases in the month of December by as much as 156%. So we've bought 1.5 times the gold in December than we bought in the month of November. So I believe it's the Shadi season, that is that wedding festivity. And while we saw in November data suggesting that gold imports were soaring over October, we saw in October gold purchases soaring over September. On a month-on-month basis, we are seeing gold is only getting more and more dearer, and more Indians are going ahead and buying gold. Now, the problem that India is staring at right now, and the rest of the world is also staring at, is that India's exports could take a massive beating when it comes to the crisis which is on in the Red Sea.
In fact, I was about to come to that. Now, this data comes from the month of December when trade was relatively stable across the world. Trading channels had not hit or take a beating as it did in the month of January, where we saw Houthis attack the Red Sea, and the Suez Canal passage and the traffic passing through it dropped by nearly 61%, which essentially means not only are shipping containers, the vessels taking the longer Cape of Good Hope route, but also spending a lot more money in importing and exporting.
So I think very obviously put, Shweta, we are looking at the alternate route, which is south of South Africa, the Cape of Good Hope, will add about 14 days of travel time for containers. So that is straight away 14 additional days added, and the cost associated with per day being on sea. The second biggest damage is actually going to be by way of the freight cost itself, which is with this delay, and in any case the fuel cost, etc., for the 14 days, and the insurance cost. And insurance risk premium is likely to go up and has in fact gone up by as much as about 7% or so. So that becomes the second hit when it comes to Indian exporters. What the Red Sea crisis is also going to play out for India is going to be by way of oil imports coming into India. And we've seen with the US and UK launching strikes on Houthi rebels in the Red Sea, we've seen yesterday, in fact, oil prices already soar by about $4. And if that trend continues, and India's comfort zone at oil prices is at about $85 or so, anything beyond that is going to hurt the Indian economy. So at one level, our exporters are getting hit because these are orders which have been placed ahead of the crisis brewing in the Red Sea, and these exporters have to service those orders irrespective, and I think a fresh negotiation on existing orders may not be viable. So there is additional cost being incurred by exporters, and as a country we will incur higher import costs when it comes to crude import at one level because of the rising crude prices in the month of Jan, and if this trend continues, obviously it's a problem, and also the fact that these imports will also have to come by a longer route.
Absolutely. So what is your view of the trade deficit perhaps going forward from here on, as exports will perhaps become more expensive and imports are also becoming more expensive? Is there room for Indian exporters right now? Because we know that they are likely to take a beating. About 6 to 7% of the total exports will take a beating. $450 billion worth of exports made in 2023 alone, that will come down about 6 to 7%.
The narrowing narrative which has been on, we saw the narrowing happen in September, and in fact after that the Israel-Hamas war broke out, and the next data which came was once there was some sort of an understated stability, so to speak, by
normalcy.
normalcy. You know, you normalize some catastrophic events also. So there was some sense of normalcy which came in December. So data of September and December pretty much in line where trade deficit did narrow. I think the month of Jan is definitely going to see widening of that trade data, and we don't know how long the tensions in the Red Sea continue. In latest news which has come in this morning is that the Houthi rebels have also now launched strikes on US container vessels in the Suez Canal area. So obviously there is this sort of flexing of muscles being done by the Houthi rebels, and even though they may not have the wherewithal to really, you know, contest or really defend themselves against the strikes coming from US and UK, they are still flexing their muscles and egging US on to keep tensions in the area alive. If nothing else, it gives them more legitimacy in Yemen and in Iran.
All right, and if those tensions continue, Indian trade deficit is likely to widen. There could be a trend reversal in the next coming months. The month of January to February, March, the last quarter of financial year 2024 would be crucial to wait and look out for.